is that it is likely. Why are they telling you it's likely? Because they're only willing to pay out $1,638. That's why. If they think it's really likely, like if I move this up here to, over the current price, look at this. That's more than what the market's trading for. Look at that payout. $10,314. But again, it's not just about what the payout is. Is it likely that for a month and a half the market's going to stay below 37.73, which means that it's going to have to move up from where it is? Okay? So hopefully you have a better picture of how these options work. I wanted to get these videos done. I know I'd actually talked to a couple of people about creating these options courses. Now that I've got a very easy way to do it, I was sort of wondering how I was going to get it done. I may clean these up, make them more systematic in the future, but I think this gives you a very basic understanding of how to use it, what kind of strategies are effective, how to use it on short-term trades, how to use it on long-term trades. Now that's not, that last one I put up there is not one that I want to put on. So you can get a really good idea for how some of these options trades will work. Now I've got a few minutes left here, and I want to talk about. Let me go ahead, pause this. Okay, I wanted to add the U.S. dollar yen because I want to show you something very, very important. Okay, this is a daily bar. Look at how big this bar is. Okay, one single day has traded more than nearly a month worth of activity. Okay, so anything is possible. Now, had you had, of course, a miss option down here where you're telling your broker, pay me if the market doesn't get into this level down here, and you had one more minute. There's one more minute left on your option, and the market plunges down, you lose your money. Okay, so this is a very good example of what can happen. Now let's go ahead and back out here and talk about the Japanese yen, because this is very volatile. I'll go ahead and I want a trend line, and I'm going to put it, whoops, messed that up. There we go. Get rid of that. Draw a trend line. That's about the right angle. And we'll move it just to check. Close enough for government work. Okay, so there's the trading lane. Let me pause this and change this a little bit. Okay, that's a bit more accurate to what I wanted. Let me freeze the screen. Okay, so I started here and just ran up the trend line. You can see it hits there, 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 there. Tried to hold here, and then today it just smashed right through. Okay, so now let's go ahead and duplicate that. Put it up top. Boom. Okay, it's a very nice trading lane. In fact, you'll find that just like lanes on the freeway, that there are multiple lanes inside of the trading lane. That's about halfway through. And you can see it about halfway through. Look at that. Paused there, reacted to it there, definitely react to it there for several days in a row, a couple weeks in a row there, a couple days in a row there. So halfway through, you can see that there was also, that's just a little bit of a review. Okay, so let's take a look at a possible trade here for the Japanese yen. Now, look at all this volatility. I mean, for crying out loud, this thing took out more than just a couple of months, all the way back into May. This thing is right back here into the May lows. Is there any wonder why the market stopped here? Look at that. A lot of support right there from the May lows. So let's take a look at a couple of boxes. We'll put this right into this consolidation there. We'll create a box like this. Mostly on price. We're not going to really be looking at time. And we'll put $50 in here as a miss box. Now that's actually paying out fairly good. Now remember, what you're saying is from July 14th to July 24th, so 10 days, that the yen is not going to get above 122.77 during these 10 days. That's what you're saying.